2023 is quickly approaching, and one of the biggest changes that's coming with this new year is changes to the electric vehicle tax credit. And this could, in some cases, lead to pretty steep discounts for anybody that's wanting to buy an electric vehicle in the coming months or in the coming years. But there are a lot of stipulations, and I've noticed that there's also a lot of misinformation going around as well. So in this video, I'm going to be doing a deep dive into what exactly this EV tax credit is, who qualifies, what vehicles qualify, and exactly what you need to know if you're somebody that's in the market for an electric vehicle. This is a much-watched video for anybody that's wanting to buy an electric car in the future, whether it be for personal use, for business use, for a car sharing fleet, whatever the case is. But before we dive into that, I do want to offer y'all one final and last reminder that it is currently Black Friday for my course, the Car Sharing Masterclass. And if you use the code Black Friday 247, you can get 49% off the Car Sharing Masterclass purchase. Today, November 30th, 2022 is the very last day to take advantage of this Black Friday sale. So if you've been looking at purchasing the course, now is absolutely the time to do so. Now, as many of you know, I'm a car sharing host and I have been for over 5 years. And what I've done with the Car Sharing Masterclass is I've taken all of my knowledge and experience and condensed it into a 7-hour course that teaches you everything that you need to know about starting or scaling a car sharing side hustle or business with the same business model that I use. And in this course, you'll learn things like how to buy cars and which cars are the best to buy, how to handle guest communications, how to automate your systems and processes, how to analyze your markets, what happens if your car is in an accident, as well as everything in between. So if you want to check that out, be sure to click on the link in the description below, use the code BlackFriday247, and be sure to do so before midnight because the deal ends on November 30th. And so with that, let's get back to the video. Now, electric vehicle tax credits are nothing new. They've been around for quite a long time, but their rules and regulations surrounding these tax credits, as well as how they can be used, has changed dramatically this year, and these changes go into effect on January 1st, 2023. Now, up until now, how the EV tax credit worked is if you purchased an electric vehicle, you would receive a $7,500 tax credit. The stipulation was that not all vehicles qualified, and eligibility was determined based off of the number of cars that a manufacturer had produced. The manufacturer cap in order to be eligible for this tax credit was 200,000 vehicles produced. And this tax credit and the advantages associated with the tax credit would phase out over time as manufacturer numbers increased. So for example, let's say a few years ago you purchased a Tesla and you bought the 1,000th Tesla ever produced. Well, in that case, because this was an earlier production car, you would receive the full $7,500 tax credit. But if a few years later in present day you decided to buy another Tesla, you wouldn't get any money because of the fact that over 200,000 Teslas have been produced. Alternatively, if you were to have purchased the 150,000th Tesla, you would get an EV tax credit, but you wouldn't get the full $7,500. That's because the $7,500 was phased out as production increased. So basically, the earlier you adopted an EV car under a specific manufacturer name, the more money you would receive from the credit. And this $7,500 was paid out in the form of a tax credit, so come tax time, you could claim this $7,500 in order to lower your tax bill. But a lot of this has changed. The Inflation Reduction Act has a portion in the act that is specifically dedicated to electric vehicles and how these cars can become more accessible to the general public, which is ultimately what this EV tax credit is trying to do. So let's first talk about which cars are eligible for the EV tax credit, and this is where things get, well, confusing. The EV tax credit has had a lot of criticism over the last few months due to the strict guidelines manufacturers must follow in order for the tax credit to be fully available to these vehicles. And the new main requirements of the credit are number 1, battery standards, and number 2, final assembly in the United States. The language of the bill states that in order for a vehicle to be eligible for the full $7,500 tax credit, a vehicle must be assembled in North America, the majority of the battery components need to come from North America, and a certain percentage of critical minerals used in production must come from North America or countries with free trade agreements with the US. Honestly, a better way to look at this EV tax credit isn't to look at it as one single $7,500 tax credit. Instead, the better way to look at it is as two $3,750 tax credits. $3,750 of the new credit is based upon the vehicle having at least 40% of its batteries critical minerals from the United States or from countries with a free trade agreement with the United States. The other $3,750 of the new credit is based on at least 50% of the battery components of the vehicle coming from the United States if the vehicle does not have final assembly in the United States and it doesn't qualify for either parts of this $7,500 credit. The 40% minerals requirement will increase to 50% in 2024, 60% in 2025, 70% in 2026, and 80% in 2027, while the 50% battery components requirement will increase to 60% in 2024 and will increase in 10% increments until it is at a 100% requirement, which is expected to happen in 2029. And beginning in 2025, any vehicle with battery minerals or components from a foreign entity of concern are excluded from the tax credit. But that's not all. There's also exclusions based off of vehicle value as well. In order to get the full $7,500, the MSRP of a vehicle must be $80,000 or less for SUVs, vans, and trucks, while for all other vehicles, it can't exceed $55,000. So with this in mind, there aren't a ton of vehicles that qualify. In fact, you can see here a list of some of the cars that are expected to make the cut, though keep in mind that this list is not set in stone. And to give you some perspective, here are some of the vehicles that previously qualified for this credit. And this list includes vehicles from manufacturers like Audi, BMW, Ford, General Motors, Genesis, Hyundai, Jaguar, Kia, and more. So there is a much smaller list of vehicles that are eligible for the EV tax credit now compared to over the summer or in previous years. But the big selling point here, at least from the government's perspective, is the idea that this tax credit will no longer be phased out. Instead, it is currently planned to run until 2032, so in 10 years, which means that whether you buy an electric vehicle come January or in January of 2030, you should potentially be able to take advantage of that full $7,500. Now, one of the exciting changes that has come along with this tax credit is the fact that now you can actually get a credit if you buy a used electric vehicle, which previously wasn't the case. There is a $4,000 EV tax credit available for used vehicles, and the rules and stipulations for this credit include that the tax credit has to be 30% or less of the value of the used EV, and there's a $4,000 cap for this. The used vehicle must be at least 2 model years old at the time of sale. The car has to cost $25,000 or less, and it has to be purchased from a dealership. The other interesting stipulation is the fact that the car can only have one tax credit in its lifetime. So if you buy an electric vehicle come January, you claim the tax credit on that car, and then you sell that car a few years later, that new owner won't be able to claim that tax credit on that car. There's only one tax credit per electric car. You also have to be a person, not a business, claiming the EV tax credit, and you can't claim more than one credit every 3 years. Now, these are the qualifying factors for the vehicles themselves, but there are also qualifying factors for the people that want to take advantage of this credit, and this is based off of income. Now, there is a modified gross income limit of $150,000 for individuals, $225,000 for head of household, and $300,000 for people filing jointly for the new $7,500 tax credit. And for the used vehicle tax credit, there's a modified gross income cap of $75,000 for individuals, $112,500 for head of household, and $150,000 for people filing jointly. The other thing I feel like I have to mention is the fact that whenever it comes to tax credits, like the one that we're discussing in this video, the only way you can take advantage of the full $7,500 tax credit is if you owe $7,500 on your taxes. So for example, let's say you buy an electric vehicle in 2023, and then whenever you file your 2023 taxes in 2024, you owe $500 to the IRS. Well, you could use that EV tax credit to lower that $500 tax bill down to zero, but that doesn't mean that the IRS is then going to be sending you a check for the additional $7,000. So that additional money is not given to you in the form of a refund, which is why oftentimes tax credits of any form tend to benefit higher income earners more than middle class earners. But this is another important piece of the puzzle that could be changing in the near future. It is expected that come 2024, the EV tax credit will no longer be applied come tax time, and instead it will be applied at the point of purchase. And this is huge. So let's say, for example, you buy a $50,000 Tesla Model 3. Well, if you want to take advantage of that full $7,500 tax credit, what you're going to have to do as of today and throughout 2023 is you're going to have to pay for that full $50,000 Tesla like you would a normal car. But whenever it comes tax season come 2024, that's whenever you will submit for the EV tax credit. And that's whenever you will get the money for that credit. Of course, that's contingent on you owing $7,500 on your tax bill. But if and when the EV tax credit is applied at the point of sale, this is essentially viewed as a discount off MSRP. So in this same example with the $50,000 Tesla, instead of having to pay $50,000 for that Tesla and then claim the credit later, you could instead only pay $42,500 for the Tesla because of the fact that that credit is applied at the point of purchase. This is huge news, and it means that you could get a significant discount off of your next electric vehicle purchase. But keep in mind, this is not expected to go into effect until 2024, so we still have a while to go. Now, I acknowledge that this is very confusing. Most government bills are. But I did find some really cool resources to help you do your own due diligence to determine if the car that you're wanting to buy will qualify for this credit. Here's a great flowchart that I found from electric.co, which helps you answer the question of whether or not a car would qualify. I also found this really cool VIN checker that allows for you to see which cars are assembled in the United States. Now, it is important to note that the old EV tax credit that I mentioned previously in this video, as of now, has been thrown out the window because many of these rules and regulations went into effect back in August whenever this bill was signed by President Biden. But the rest of the rules and regulations within this bill are what's going to be going into effect come January 1st, 2023. So in just a few short weeks. But the reason why I make this video is because this could be a game changer for anybody that's wanting to buy an electric car. And I definitely acknowledge that this bill is far from perfect and it has gotten a lot of valid, warranted criticism. It doesn't change the fact that if you're somebody who is in the market for an electric car, this could make a big difference, especially once this EV tax credit is applied at the point of sale. And if you're somebody who's looking to buy an electric car, like a Tesla, for example, it may be worthwhile waiting until January where you can actually take advantage of the full credit. Now, this of course all depends on your personal financial situation, and I am absolutely not a CPA, so I encourage you to reach out to your accountant to get their thoughts on this tax credit and how it would apply specifically to you and your financial situation. But what I covered in this video is for the most part how this bill works and what you need to know if you're somebody that has an EV purchase on the horizon. But like always, you guys, I hope that you enjoyed this video. If you have any questions, comments, if you have anything to add, I would love to hear it. So make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit the subscribe button, and hit the notification bell. And I'll see you guys in the next video.